All right, good morning. This is the 3rd of August. It's already August. That's so fast. So let's do the analysis of last week. So we placed a long on Monday night because the trend was up, and we closed our trade on the candle close. And after that, we entered a short position. This short position we could have taken it below, I guess. Oh wow. We kept on shorting after the break of structure when it returns to the order block. We shorted. This trade was a fail because when it went down, I didn't take profit after the break to the downside. Instead, I set my stop on the previous low. So this short position got stopped, but then I immediately got into another short entry because even though it took our stop, it did not close above the order block. So that was something nice. Then the FOMC comes and spikes up the price. I entered a long position on the retracement at 4 o'clock in the morning. And initially it was going good. But it failed. It was very it's very unfortunate because it did end up going above and take my target. It is what it is. The strategy is the strategy. So what we have now is very simple. Let me get rid of this. So we have a change of character to the upside, and we also have the same key zone. We still have the same key zone of the 4 hour. So this key zone is I talked about it several times. Resistance, failed support, resistance, 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 resistance. So that's a very strong support key price, key zone. And that's something we have to keep in mind. Another thing we have to keep in mind is that we are ranging and we are squeezing. What it means is we're in a range and the range is tighter and tighter and tighter. So when it comes to a tight range in a higher time frame, it's very, very hard to trade correctly because we don't know where the correct direction is, and meaning we won't have a good stop, meaning we won't have a good profit to P&L ratio. So the best is to not trade until it breaks out either direction. And the strategy that I follow now also doesn't allow us to trade after the break of this, after the fail long attempt. Excuse me. After this long failed, there's really nothing we can do. Unless we have a clean break of structure of this up, break of structure to this. But even when the price breaks above cleanly, there's also very strong resistance for the market to push the price down. So either way, I don't want to trade this. Not for I wouldn't want to trade this. And what I want to trade, one is for investment, is the Nikkei. I strongly believe Nikkei is good. My long target is still on this red line, 59,500 ish, 300 ish. I still want to wait properly for my long entry. I don't want a long now. Still in the downtrend daily. We cleanly broke below this, so it could be a liquidity target, a liquidity sweep into this bullish order block and continuation to the upside. I I I I want to hold it for a long time, so I want a perfect entry, and perfect entry that I can just hold on to it. Whereas if I enter a long position here, my stop would be just below this, and I feel like it's gonna hit. Another good. This is for investment, and another good entry for trading, I believe, is the yen pairs. So the BOJ did the intervention to keep its yen's value strong, and it retraced from the swing low to the swing high at 61.8%. Then from the 61.8%, 61, yeah, it retraced how much? That's 280 pips. That seems like nothing, but then Americans, the handsome guy, what's his name? Benson. Yeah. He also said something like yen is still very much undervalued. It should be strong. I believe he said it because he doesn't want Japan to sell US bond. I don't know. Japan holds a lot of the Americans bond. Japan seems like an independent country, but after the World War II, as we know, we are pretty much the dog of America. In Asia, we call Japan the dog of America. Why? Because we bark for America. So America still wants Japan to hold the American bond, and they don't want Japanese government to sell American bond to keep its yen value. Um, it also doesn't make sense because America also said something like Japan has cheaper yen. That's why they want to put the tariff on us because we sell goods better when our currency is cheap. Is true, but that's not on purpose, right? So America does whatever America wants to do. It's the mafia of the Western world, and if America's intention is to keep the yen strong or relatively stronger than than or relatively stronger than the historic low of its value, because they don't want Japan to sell off the bonds, then that means then that really means yen is gonna continue to be fundamentally weak, because despite them saying that, people are still selling yen, and our interest rate is still very much lower compared to any other currency's interest rate, and yen carry position will still occur unless they do a big dump, which I don't expect it to happen anytime soon, and especially with Takaichi doing the same thing as the female prime minister of England did. What's her name? Harris. Was her name Harris? Harris, the prime minister of England, the female one. She said she's gonna lower the tax, but then people found out that it was impossible to lower the interest rate because they didn't have enough money to support it. And Japan is basically on the same level, if not the worst, because the debt to GDP ratio is the highest in the world, and Japan just fundamentally is they openly said they're not gonna try to balance out their balance sheet. So instead, they want the inflation to lower their entire debt. They want the inflation to happen so that their debt looks smaller in comparison to the inflation. I don't know how to explain this. Well, what they want to do is they want to print more money into the market. And that would mean the yen value goes down. So fundamentally, it's impossible for yen to be attractive to hold, to buy. So they will try their best to keep the yen's value relatively stronger, but it's still gonna be cheaper when compared to other currencies. And 157.8 currently, we did the retracement it wants to do, and it's a perfect long, to be honest. It's just gonna go up from here. Every time yen goes down, it's a perfect time to long. Every time goes down, long. Every time goes down, long. You know, it goes down, long. Goes down, long. It's just there's no point in arguing this at this point. Like fundamentally, it's correct. It's moving in the correct direction. Technically, it's also going in a correct direction. And by holding yen long position, we get swap points. So we get money by holding, by selling yen because of the interest rate difference. So there's no point in arguing that yen long is the correct trade. And I already have my yen long position. I believe this is the correct trade. This is another thing I'm in. Yeah, that's it. So Nikkei and yen pairs is what I'm looking at. So for the dollar pairs, I'm not interested in dollar pairs. I don't like trading dollar pairs because it's always in the range. I placed my first short entry May, somewhere here. I held it all the way to the break. And I took out here. So I basically shorted here. I took out here. It's a very stupid trade. I should have taken when it breaks here. Now that I think about it, I just forgot about this trade. I don't like trading dollar pairs. It doesn't make sense. Yen pairs are much better to trade because it's very simple. You just long, long, long. Every time it drops long. Pound yen is okay to trade also. Pound yen has a larger swap points and also higher volatility. So one mistake will get you bankrupt. But on the other side, if you make the correct trade, it doubles your account very quickly. Well, that's it for the analysis. So we don't do anything on the gold because we're in a range, higher time frame range, and it's also squeezing the price. The range is getting tighter. So what it means is we're not gonna trade unless we get the clear direction. And what we want to trade instead is the yen pairs. We want to long. We want to long every time it drops. Long every time it drops. All right, that's it.